Inflation has been a very hot topic recently, with investors worried about it and its impact to investments. Let's find out what's going on. Cha-ching! What's up everyone? Welcome back to another episode with the Millennial Finance. In May of 2021, Malaysia has recorded a 4.4% inflation rate. In comparison, our inflation for 2018 and 2019 was below 1%. In the US, this is even worse. In June of 2021, their year-on-year inflation rate was 5.4%, which was the highest in over 30 years. Real quick before we start everything, what is inflation? So inflation is a general increase in price of a country's goods and services. Was it just us, or have your parents told you before when they were giving you your allowance about how things are so expensive now, and back in their days, Coke was 20 cents and nasi lemak was 30 cents. Maybe it was just our dad. Well, reality check. Of course, there's no way that we can buy Coca-Cola these days for 20 cents. They're more like 2 ringgit. And the reason why prices has gone up from our parents' days to now is because of inflation. 20 years ago, having 1,000 ringgit would mean so much more than having 1,000 ringgit today. Of course, today it feels good to have 1,000 ringgit. No one would complain. But back then, I assume that it would have been a much bigger deal. So is inflation bad? Well, we might feel that it is because our savings are devalued. We now need to spend more money to buy stuff and go on holidays. But technically, inflation is necessary for a growing economy. Most countries who are targeting economic growth, which is basically every single country in the world, including Malaysia, targets a healthy inflation rate of around 2 to 3% every single year. It's a sign that the economy is growing, and in fact, deflation, which is a decrease in price of goods and services, can actually be really bad for a country. On the other hand, hyperinflation is when inflation goes way out of control. The value of your money just loses so much every single day, and a good example of this is in Venezuela, where literally a stacked pile of toilet paper is worth more than a stacked pile of their money. They have $1 trillion notes, but it's all worth nothing. So back to inflation, how does this impact you? Since inflation increases the price of goods and services every single year, any money that we leave idle technically loses its value by around 2 to 3% every single year. If you kept all of your savings in cash and kept it under your pillow because you thought it was safe, well, 20 years from now, you'll be really sad to find out that the life you've been saving towards, you can't live it. Also, if your day job doesn't give you an increment or gives you one less than 2 to 3%, then technically you got a pay decrease by your company this year because inflation has eaten away at the value of your salary. So call up your HR, tell them you're not even giving me equivalent of inflation, so what's the point? And now that inflation is really high, as I mentioned at the start of this video, things can be even worse for us. So how do we get into this situation that in both Malaysia, US, and in fact everywhere in the world, inflation is growing at a very fast pace? This is actually happening because governments around the world have increased their spending to prevent an economic meltdown because of lockdowns. For example, in the US, the government has been giving out aid and giving out steamy checks to all of their citizens, which increases money supply. I'm sure some of you have seen the memes of Fed Chairman Jerome Powell printing money like it's nothing. So when the government prints money out of thin air and gives it to their citizens, they now have more money. If I have more money, I want to buy more stuff, and in basic economics, if demand goes up, prices will go up as well. That's in the US, they've been printing a lot of money, but in Malaysia, it's not actually that bad. However, it could become a lot worse. Remember how I mentioned that inflation has risen by 4.4% in May of 2021, but the thing about that is we are still in lockdown while the US isn't anymore. Once Malaysia gets out of lockdown and all of us start going out again, start getting back our jobs and spending more money, inflation will definitely rise more and more, and it will be way higher than where it currently is. In fact, analysts have been projecting a 7 to 8% inflation rate for Malaysia in 2021. It hasn't really materialized because we've been stuck in lockdowns for the first half of the year, but in the second half of the year, assuming we reopen, which I really hope we do, we should see this inflation number really start to go up in 2021 and going into 2022. However, an important thing to take note of is the base effect. This basically means that we are comparing this year versus last year, and of course, last year inflation was very, very low because of bad economic conditions, people weren't spending. So since the base, which was last year, is very low, any growth this year would seem like a very large number percentage-wise. This is why the Fed in the US keeps saying that inflation is transitory. They're just saying that because of the comparisons against 2020, inflation numbers look high, but it won't stay this way for a long time. Some people disagree. I'm not smart enough for this, so let's just see what happens. So what should you do to protect yourself from inflation? The simplest way to overcome all of this is, of course, to invest your money. If you're losing 2 to 3% of the value of your savings every single year and you're making 6 to 7% on your investments, then technically you're up. The US markets have been incredibly strong, rebounding from the lows of last year, and even in 2021, returns have been really great. If you invested your money anytime throughout this period, you would have far outpaced even the high inflation numbers that we have been seeing. There's no guarantees that the stock market will keep going up, but at this point, we don't really have very many choices. As Malaysians though, we always mention this, if you're lucky, if you're Bumiputra, you have ASB, and even if you're not, we have EPF, and both of these investments should outpace inflation. So if you're thinking about withdrawing from EPF from the iCitra program, if you don't really need this money, then think twice about it. However, higher inflation rates will also have an impact on investments and especially the stock market. Since people know that inflation was going to be high and that the value of their money was going to go down, we have seen a major shift in people's investment strategies. Growth stocks, which are the majority of my portfolio, have taken a beating. Now, this is because most of them don't make any money yet, and they're only projecting to do this in a few years' time. When inflation is high like it is now, what investors want are companies that give earnings now, not 5 years down the road. This is why the mega cap tech companies with huge earnings are still doing okay. I mean, if you take a look at the prices of Apple, Microsoft, and Facebook, they've held up very well. In fact, they're making new all-time highs nearly every single week, and they're almost single-handedly carrying the entire S&P 500. So what am I doing? Honestly, as a millennial who has just started investing for a few years, this is the first time that I'm actually investing in a high inflation situation, and in fact, many things are first for me. For now, I'm sticking to my guns. I don't want to change my investment strategies. Short to medium term, maybe in 1 to 3 years, we may see some volatility in the type of companies that I invest in, but long term, strong companies will always give good returns regardless of the economic environment. Having said this, I have sold off a few of my stocks that have no clear path to profitability. They seem to be just losing money every single year, and once I lose conviction, I just decided that it's time to sell those off and put it into the ones that I'm really confident in. I've replaced this with much larger cap companies that have strong profits, like I mentioned, so companies like Facebook, Disney, Alibaba. I feel like I'm becoming more and more of a boomer. It's funny how Facebook is now becoming like a value stock, but I really like these companies and they have been performing really, really well. I still hold a lot of my other growth stocks that have taken a beating. I did take the opportunity to buy the dip. I'm gonna diamond hands it, and hopefully in a year or two, we'll be seeing very good returns from these stocks. So we're currently in a situation where inflation is high and will most likely continue to be high in 2021, and for Malaysia, probably going into 2022. We don't know whether this is transitory, but the best decision that we can make as retail investors or individuals is that we should just invest our money in the hopes that we can outpace or at minimum match inflation so that we don't see a devaluing of our savings. Thanks for watching till the end. Let us know down in the comments below. Are you investing your money so that you can outpace inflation? Give us a big thumbs up if you enjoyed this video, share it to your friends, subscribe to your channel if you haven't already, and see you guys in the next one. Peace out.